Another episode on the smart money concept trading model. Okay, so before we get started, I would like to apologize for the delay on this episode. Okay, it wasn't intentional and I really apologize. Okay, so if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified when we upload our weekly content. Okay, so in today's episode we're going to talk about the reinforcing order block theory. Okay, we're going to talk about reinforcing order block theory. Okay, so now we are getting much closer to the PD array matrix. Okay, and the way we are going to do this is that I'm going to teach about all the 7 PD arrays. Okay, we're going to teach about it in different episodes. Then we're going to make a single episode that's going to cover all that's going to cover on the order at which price reaches for the matrix. Okay, so there's going to be a single episode that's going to talk about the arrangement, the proper arrangement of the PD array matrix. Okay, but before then we are going to talk about each array matrix in different series. Okay, so this particular episode we are going to be looking at order blocks. Okay, so this is reinforcing the order block theory. Okay, so now let's get down to business. Now reinforcing order block theory. Okay, so we're going to be looking at the bullish order block. Okay, and of course everything we're going to see here is just vice versa for the bearish order block. Okay, so now the definition of a bullish order block in the 2022 mentorship we got this definition right. Okay, so it could be the definition is simply the change in the state of delivery. Okay, so this is for the 2022 mentorship. This is the definition that came along with the 2022 mentorship model. Okay, then this right here is how is the definition that when I came across smart money, this was the definition I was taught. Okay, or rather the definition I was aware of. Okay, so this is how we view the order block before 2022 mentorship. Okay, so now the lowest candle with a down close that has the most range. Okay, notice that has the most range. Okay, underline this word, that has the most range between the open to close. Okay, and is near a support level. Okay, remember we are talking about a bullish order block. Okay, so one of the criteria, this right here are the criteria, right? These are the criteria of a bullish order block. Okay, so the lowest candle with a down close that has the most range, okay, between the open to close and is near a support level. Okay, so that is the first criteria. Now the validation of another block. Okay, the validation of a bullish order block when the high of the lowest down close candle is traded through by a later formed candle. Okay, that's order block, that's down close candle is now considered validated as a bullish order block. Okay, so we're going to look at that as we go deeper. Now I want to stress this out. Prior to the lowest down close candle being traded through, okay, until price trades through the last close down candle, it is not yet validated. Okay, we're going to look at that when and as we move further. Okay, so now the entry techniques on trading off an order block. Okay, when price trades higher away from the bullish order block and then returns to the bullish order block candle. Okay, this is bullish, this is our bullish setup. Okay, so now we are going to be looking at two entry techniques used in trading the order block, in the bullish order block. Okay, so remember everything's going to just be vice versa for the bearish order block. Okay, so now in this case, if this was the bearish order block, we'll be looking at the lowest or sorry, the highest candle with a up close. Okay, so it's going to be a bullish candle instead. Okay, not a down close, it's going to be an up close if we are talking about a bearish order block. So everything I'm saying is just a vice versa for the bearish order block. Okay, so the entry technique is going to be when price trades higher away from the bullish order block and then returns to the bullish order block candle. Okay, so this is our bullish setup. Okay, so now defining the risk. The low of the bullish order block is the location of a relatively safe stop loss placement. Okay, is the location of a relatively stop loss placement. Okay, so now just below the 50% of the order block total range, okay, is also considered to be a good location to raise the stop loss after price runs away from the bullish order block to reduce risk when applicable. Okay, so I want to look about this now. We're going to talk about the below the 50% of an order block. Okay, we're going to talk about what that means. Okay, so now let's go deeper. Now this is a bullish order block, right? This is a bullish order block. Now we have price. So we remember we are looking for a bullish order block, right? So what is the first criteria of a bullish order block? It has to be at a support level. Okay, in other words, price have to trade into a support level. It can be an higher time frame support level. Okay, it could be an old low being run out, a run on liquidity, or a return to fair value gap, or it can just be any of the higher time frame support level. Okay, so now we have price. So this is we are making an assumption that this is our support level, right? So we have price trading. So price just traded down into our support level, right? Now this is a potential order block. Okay, why are we calling it a potential order block? Until candles, okay, until we have a candle that breaks the high of this down close candle that traded into this support level, this is just a potential order block. Okay, so it has not been validated yet. Okay, so this is just a potential order block. Okay, so now at the same time, now we have price trading down into the support level, right? And we have this this bullish candle that trades through the high of the last down close candle. Okay, so now this order block right here has been validated. Okay, so this can now be referred to as a bullish order block. This immediately after this candle traded through it. Okay, this is now a validated order block. Now the first entry is that you can make your entry once this candle trades through. Okay, you can place your entry if it trades back down into the down close candle. Okay, in other words, this candle is still forming. Okay, if it once it trades through and expands higher, if it starts retracing downwards, you can place your entry right there. You can place a limit or a market execution, right? So your stop loss is going to be below the low of this candle. Okay, so now we're going to talk more on that. All right, now as you can see, we have validated order block, right? So the first entry criteria we talked about is when after this candle, okay, trades through the high, breaks the high of this last down candle, validating this as a bullish order block, right? If the first entry we talk about is that if this same candle right here trades back down, okay, because it's expanded higher, right? It's expanded higher and broke the high of the last down candle, creating the order block, right? So now our first entry will be if this particular candle, as it expands higher, if it trades back down into the high of the candle, okay, we can look at the wick, the opening, the high of the candle to the opening. Okay, so that's how we look at it. Once it trade back down, that is our first entry. Okay, so let's say you missed that, you couldn't get an entry, okay, and price expanded higher. Now as price begins to retrace lower, as price starts retracing lower, reaching back for the order block, okay, so I'm going to ask you this question: what is currently resting above here, and what is price reaching for? Okay, so I want you to think about it, and I'm going to provide the answer on as we move further. Okay, so this is a question for you to give a thought. Okay, so what is above here currently, and what is price reaching for? Okay, so now going down further, this, as you can see, price reached for our order block. Okay, so now this is smart money taking longs entry, and this is our entry technique too. Okay, so let's say you were unable to get in on this particular candle and you had the first expansion, right? So you wait for the retracement. Smart money are going to wait for the retracement. So this is our entry too. Okay, smart money are going to take long positions here. They are going to place more long orders right here. Okay, so we still have a pending question: what is resting above here and what is price currently reaching for? Okay, so let's take a look at that. Now, as we have the price, as price started, retracing, going lower, retracing back down into this trade, into this range. Okay, what is resting above here, like we asked earlier, is this is external range liquidity. Okay, we are looking at the current trading ranges with from this low to this high, right? So we're going to have external range liquidity resting above here. Price is going to be reaching for some going to be reaching for internal range liquidity as it retraces back to the order block. Okay, so price is going to be reaching for internal range liquidity. All right, so that is what is going on right here. So once we have our entry right here, once price trades down and we place our execution, our probable our most high probability how am I going to put it, our exit. Okay, our exit is going to be probably above this external range liquidity. Okay, because price, there's going to be some buy stops resting above this old high, right? So now going down further, smart money are going to place their stop loss, their buy entry right there. This is the buy level. Okay, so this is the buy level, and what's resting above here currently is external range liquidity. Okay, so we have talked about internal range liquidity and external range liquidity. Okay, we have talked about it sometime in one of the previous episodes, right? So now if we have, let's say we place our buy order right here, so our stop loss is going to be below the low of this order block. Okay, going to be below the low of this order block. Now once we have an expansion, okay, talking about the 50%, sometimes once price trades down, it's not sometimes it won't react off easily. Okay, it might dip down further to the midpoint of this order block. Okay, so what you do, the midpoint of this bullish order block is referred to as the mean threshold. Okay, so what you do, you take your fib and you measure the whole range of the bullish order block. Okay, so the midpoint, that is referred to as the mean threshold. Okay, so sometimes price is probably going to reach for the main threshold. It's going to dip down further into the main threshold, then it's going to buy, it's going to start expanding higher. Then once we have an expansion away from this order block, it is best advisable to move your stop loss from the low to the mean threshold. Okay, so how do you know the mean threshold? You measure the range of the bullish order block with your fib. Okay, you measure the range and the midpoint, that's your mean threshold. Okay, you move your stop loss to that level. Okay, so now as you can see, price reacted off the bullish order block and paired our log exits with the buy stops resting above here. Okay, so now when we had this expansion, we moved our stop loss to the mean threshold, right? So probably if you had maybe you have an higher objective up there, okay, somewhere up there that you expect price to reach for. Okay, so this could probably be your first TP. Okay, you pair your long exits with buy stop resting above here. Okay, so this could be your first exit, right? So that is just the concept of an order block and how we identify it. Okay, before 2022 mentorship, that's how we look at it. All right, so now we're going to go into the chart and look at this example with some price action, some live chart data. Okay, some live chart data. Now this is the USD card, of course, on the 1 hour time frame. Okay, so this is just a random example and I'm not talking about a particular style of trading. I'm not talking about, this example is not based on a particular style of trading, like let's say is this is this an intraday trading pattern? No, so this could literally be this should be a swing trade. If I'm not mistaken, this should be a swing trade because this is a single time frame. Okay, I'm doing this example on a single time frame, which is the 1 hour time frame. Okay, so now we are assuming this is our support level. Okay, we have this support level, right? As you can see, price went down, grabbed liquidity and probably traded into, let's say, a fair value gap or traded below an old low, right? Then we had this shift in structure, right, and expansion higher. Okay, so this is our support level. This is that support level we are making reference to. Okay, so now remember we talked about the validation of the OB. Okay, now what we do mean by the first criteria we talked about is that identifying your OB has to be the candle that has the most range between the open and the high. Okay, so now looking at these three, we have, you know, the 2022 mentorship talked about these three being the bearish order block, right? So in 2022 mentorship model, we learned that these three are the order blocks. Okay, before the 2022 model, okay, this was how we identify our order blocks. Okay, so now the first criteria we learned, okay, we talked about earlier, is that the candle that has the most range. Okay, when we talk about range, that has the most range between the open and the close. Okay, so now looking at these three candles, which of the candle has the highest range? Okay, that is going to be probably this one, right? Because between the opening, okay, the high, the opening, and the low, and this other candle between the opening and the high, this has the range, this has the most range, this has the biggest range, right? So that's why we didn't use this, and we used this as our order block. So our main trend is going to look like, you take your fib and you measure between the low to the high, right? And the midpoint, this is the bullish order block's mean threshold. Okay, so there are going to be times when when price is going to, you know, reach, it's going to, you know, reach for the mean threshold, it's going to reach trade down into the mean threshold before expanding higher. Okay, so out of it is not going to be like what I mean is that it's not going to be every time that price is going to literally, you know, just hit the opening price or the wick and burst off. Okay, there's going to be times that price is going to reach deep into, okay, into the mid threshold. Okay, so now this order block was valid when we talk about the validation of the OB, when this particular candle, okay, traded through this candle, right, traded through the high. So this last down candle was validated as our OB when this particular candle broke the high. Okay, so this this down close candle became very validated OB. Okay, so now the first entry technique we'll talk about, taking a look at this, you can see that when this candle broke the high, right, it expanded up first. Okay, then it traded back down. Okay, you can see the wick, right? So this would have been your entry, right? So this would have been your entry, and your stop loss is probably below this low. Okay, probably below this candles low. Okay, so now what's the downside to this? We are going to look at the downside to this entry. We're going to look at the downside to it. Okay, so this would have been your entry when this candle retraced back down into this. So this would have been your entry, and your stop loss would have been above here. Okay, so when this expansion happened, you would have moved your stop loss to the mean threshold of the order block. Okay, so now we look at the range. Now we have, so let's say you are not able to get in right there. Okay, and you had this expansion and price just, you know, expanded higher. Okay, so now, and it started dropping down, price started dropping down, right? So we have this total range, right? We'll take our measurement, and as you can see, this is the midpoint of the range. Okay, so now the downside I was making reference to when I talked about using the entry on this candle is that okay, let's get down to the next slide. I'll show you what I mean. Okay, so now when I talk about the downside of this entry is that, so this is our second entry, right? We have what is resting above here, buy stops, look what is resting above here. Okay, obviously buy stops is resting above here, right? We have buy side liquidity resting above here, and what is resting below here? That was the question we asked the other time. Okay, we have sell stops resting below your sell side liquidity. In other words, we have external range liquidity and internal range liquidity. Okay, so now when price started retracing lower, okay, when price started expanding lower as in form of a retracement, what is it reaching for? Okay, what is price currently reaching for as it started you know, expanding lower? Okay, it's obviously reaching for the sell side liquidity resting below this old low. Okay, this old low right here. Okay, so now as price starts to drop down, back down into this trading range. Okay, this not this dealing range. This is our dealing range, right? So this is our dealing range. So as price started retracing down, expanding lower in form of a retracement, what is it reaching for? Okay, I asked the question your data. What is price reaching for? It's obviously reaching for the internal range liquidity resting below this old low. Okay, price resting below this internal range liquidity resting below this old low. Okay, so now if you don't have the idea of what internal range liquidity versus external range liquidity is, okay, let us look at it this way. So an internal range liquidity is going to look like something like this. Let's take a look. For example, we have this trading range low, right, to this trading range high. Okay, so between this dealing range right here, between this dealing range right here, this old low, what is probably resting below this old low is, those that were lucky enough to go long right here. Okay, although this is outside the scope of this teaching, I just want to make sure we're on the same page. Okay, so now we have, let's say for example, we have this range, right? This is our dealing range. It's our dealing range, right? So what's probably resting below here is sell side liquidity, right? So between this high and between this low and this high, this will be viewed as an internal range liquidity. Okay, so once price starts retracing, it's probably reaching for some sort of internal range liquidity. Okay, and that is where smart money are going to accumulate more long position. Okay, so obviously the trend is bullish. Okay, for the trend to continue being bullish, there has to be buying and selling, right? So and once price starts retracing, smart money are going to be looking for, to pair their long, to place more long positions with the internal range liquidity, with the liquidity resting in this, within this range. Okay, so as you can see, price traded down a bit, and went up and grabbed. This will be viewed as our external range liquidity. Okay, resting above here, outside of this range is external, then in between this trading range low and this trading range high is internal range liquidity. So the liquidity resting below the low of this candle, the low of this dealing range, is an external range liquidity. The liquidity resting above the range, this dealing range, is internal range liquidity. Okay, so viewing this now further, between this, let's say this is our dealing range. Okay, now let's say this is our dealing range low, dealing range high. Okay, so now between this range low and this range high, below these old lows, are going to be resting internal range liquidity. Okay, so this is going to be viewed as internal range liquidity. Okay, so now if looking at the whole range right here, okay, so resting below this old low, if this is our dealing range, right, below, so between this high and this low, under these old lows, are all internal range liquidity. Okay, so smart money are going to look to pair their long entry, their long positions, with the internal range liquidity resting between this trading range low and this trading range high. Okay, so I hope that is clear. Okay, now the downside of the entry of on the first technique that I mentioned is that we are not going to have a clear internal range liquidity to target. Okay, I'm not going to have a clear internal range liquidity to target. Okay, so obviously your target is going to be some sort of an old high resting above here. Okay, resting maybe somewhere to the left side, an old high. Okay, so that's going to be your obvious target. Okay, but on the entry 2, on the second entry, right, as price starts retracing lower, okay, as price starts reaching for the internal range liquidity, definitely price is going to reach for the external range liquidity, because this is a bullish trend, right? So the probability for price reaching for the external range liquidity is very, very high. Okay, so that gives you a goal, that gives you a goal to reach for, that gives you a price target, a profit target to reach for, right? So that is just the benefit of using this second entry. Okay, that's the benefit of using this second entry, though both are fine and they work well. Okay, so now going down further, what is resting above here, as we can see, we have external range liquidity and internal range liquidity, right? So now price trades down into our order block, although it's missed by a few pips, but your broker spread would have definitely tapped you in, right? You would have had a limit order right at the high of this order block. Okay, so now if you were viewing this order block in terms of 2022 mentorship, these three would have been your order block, right? So you would have gotten in on time. But if you had used this old how we used to trade the bullish order block before now, okay, although you would have also gotten feed in, because probably your spread adding your spreads to this few missed peep would have probably traded through and tapped you in on the entry. Okay, so now let's say you go long here. So where is your exit? Where is going to be your exit? Okay, where is going to be your exit? Okay, so now that brings your mind back to this. Okay, what is resting above here is a standard range liquidity. Okay, so this is going to be a good idea exit, okay, to get out of the long trade, okay, to exit your long trade right here. Okay, so this is an ideal price level to get out, okay, because resting above here is buy stops, okay, willing buyers that are willing to buy at a high price, okay, at premium. They are willing to buy at premium. We have buy stop resting above that, okay, so they are willing buyers resting above here, okay. So that is going to be your your probable the most high probability, high level of exit, okay, high level of exit. Okay, now as you can see, we paired our long exits with buy stops. Okay, price reacted off the OB and smashed through and got us out of the trade. Okay, so now that is just it on the order block. Okay, so we talked about the takeaway of this lesson is that we talked about uh, the identifying our OB, okay, and the validation of the OB. We talked about entry techniques and defining the risk. Okay, we talked about this. So this everything we said is probably going to be a reversal, a vice versa for a bearish order block, right? For a bearish order block, it's going to be the highest candle with a up close, okay, that has the most range between the open to close, okay, and it's near a resistance level. Okay, so it might be some sort of old high being taken out, a run on liquidity. It might be a fair value gap being reached for, okay, just any of this resistance level, okay, higher time frame resistance level. Okay, then the validation is going to be when the low of the highest candle up close of the highest up close candle is traded through by a later formed candle. Okay, so that is just going to be vice versa for everything. Okay, then when price trades lower away from, for a bearish order block, okay, so when price trades lower away from the bearish order block and then returns to the bearish order block, that was going to be our bearish entry. Okay, so everything I'm just saying here is just going to be a vice versa for the bearish order block. Okay, so I hope we have found this video helpful. Please, if you have not subscribed to this channel, please support us and subscribe to this channel, and we thank those that have supported us from the very onset, that have subscribed to this channel, and we appreciate you guys, and it shows that our effort is being appreciated. Okay, so like every one of us, we are still learning, and we hope to see every one of us at the top. Okay, so have a good trading day, and until next time, be safe. Okay.